What's going on, Mark?
Marty, how you doing?
I'm good, my friend. Welcome everyone to the Real Estate Power Play. We have we have a great show today, but we got Mark Monroe. We should have Gabe Rodarte here. He's got some internet connection issues, but he should be popping up here shortly.
Yeah, if not, Ronnie might jump on too.
Okay, great.
Yeah, so how you been? You got it. Tell me what's going on and tell me some of your biggest successes this week.
Well, we've had some really good traction with some new leads that we've been working on. We're really working with our cold calling team. We have 3 cold callers that we have full time. So it's getting them amped up. It's getting them to believe. It's getting them to know that they have an important role in the company. They're the first introduction to upstate home buyers. So it's just getting everybody going. You know, it's still early in the week, but we got to get something on the board. So nice. Far, so good.
Nice. How you doing overall year to date?
We're doing very well. We're all 3 divisions seem to be working as good as we wanted them to, right? So we have our fix and flip division where we're on pace to do about 25 flips. So that's awesome. Where we wanted to be. And our wholesaling division, that's always a fun one because that is really the pipeline to go into our fix and flip division or into our rental division. So if those 2 don't fit for us, we shoot it out to other investors. So it's really the most important division, I believe, is our wholesaling marketing division because it sets up the other 2.
Nice. So this kind of segues of this week's discussion. We're just talking about, real estate investing versus stocks or Bitcoins or any other alternative. And, so we're just going to have a broad discussion. If anybody wants to plug into a comment, ask questions. So this week's just going to have a broad, and that was a good example of right there what you discussed there about, when you have deals. How do you determine if you're going to hold it or if you're going to flip it or get rid of it? How do you determine that?
So for us, it really just depends on where our guys, our contractors, our employees, where are they? What's the next close that's coming up? Because it's tough here in New York State. We really don't have a lot of control over when stuff closes. I mean that's for anybody, but we're looking at about 45 to 60 days. That's how long things take to close here. So wow. We have to be very careful in what our next step is. So our lawyer, there's no title here, guys. There's no title company in New York. So, there's title companies, but it's not the same as any other state. It's super slow. It's attorney focused. The attorneys run the world here in New York, and especially in Rochester. So we're constantly talking to our attorney going, what's coming next? What's down the line? So it's a very tough game to play, but we seem to be playing it okay.
Oh, nice. So my success is I was in Croatia last week.
Yes. Wait, so talk about that a bit, would you?
Dude, it was absolutely stunning. One of my top probably 3 favorite places so far in the world to visit. It was just So I didn't know this, but did you ever watch Game of Thrones at all?
Yeah.
All right. So where we stayed at was actually King's Landing. Yeah, and I think I posted some photos and stuff, but it was absolutely stunning, beautiful. Food was great. One of the cleanest cities I've ever been in the world, and it was just absolutely stunning. So I was working a little bit, but I worked all weekend, and then I came back and I had to shoot up to Massachusetts on a land development deal that we've been working on up there for.
Well, let's go into that a bit. What's that all about?
So that's just coming along. We're looking at possibly putting 21 lots in, so we're going to subdivide it first, put the lots in. We're going to probably sell a few lots off, and then we're going to actually build some properties as well. So that was kind of our success.
Well, hold on a second. So you found the lot through what?
Actually, what happened was one of my investors, and that's kind of what we're talking about, reached out to me, and about a month and a half, 2 months ago, reached out to me. He goes, "Hey, I've been working with my general contractor. He's been doing like 1-offs, 2-offs. He's got, a few of them. He's been his private investor." He goes, "Hey, we got this land." He brought this land deal that's off market to me. And he goes, "Hey, this GC, he's really good. His work is great, by the way, quality, but, chatting with people, he wanted me to kind of come in. But this GC is a lot sharper than I originally thought he was, so he's really good on
good.
that. So that's how the deal came about, and I just been working closely with the GC. The money guy he doesn't care. He goes, just make the deal work. Ronnie, how you doing?
What's up, guys? How we doing?
Thanks for jumping in. Gabe was out there camping with his boys out in the woods, and I guess he had some internet issues. So thanks for jumping on. How you been?
I've been good, man. I've been good. I had to run and instead of getting a wire on one of our closings, they sent a check. So, it is what it is. But I had to run out there, so I'm glad I could get back and jump on, guys.
Nice. What's some of your successes for the week?
My successes for the week. So last week we closed one property. We had a wholesale on one property. We just picked up one, and we're in the process of contracting literally as we speak. It's 4 duplexes with creative financing. So awesome. 0% interest, 4 duplexes, creative financing, and depending on what the terms actually come up, it could be a pretty sweet cash flow on our side. And then this week we have 3 closings. So
awesome.
Love that.
Yeah, so a lot going on, but hey, it's part of the game, right? It's fun, it's exciting. Lots going on. So what are we diving into?
I guess we're going to talk a little bit about, the stocks, Bitcoins versus real estate, kind of the pros and cons. I like both, except, I'm in all 3. I've done extremely well over the many, many years in the market, and same with real estate. So I know a lot of my friends, if they're watching, I know they're big and they invest fully, and that's kind of what they do full time. And I know Marty up there, he's big in Bitcoin. But what's bizarre is we're sitting here talking about it today, and you guys see what's going on with the market today.
I have not looked at the market today.
Yeah, no. it's not doing the best today so far. It's like a lot of stuff is coming fruition of what's been happening in our economy for a little while. So it's just it's a stimulus economy, if you will.
Yeah.
I mean, I'll tell you right now, I think it's completely propped up by all the money printing that's gone on in the last 2 years. I honestly think it's not a true stock market, right? I think it's completely manipulated, and that's why I really don't pay attention to it at all. I'm completely on real estate and some other stuff, but I'm way more focused on real estate than anything else. I'll tell you, my Roth and all that other stuff, that's just cherry on top. Whatever happens, happens. I don't pay attention to it. But I'm fully focused on real estate, and I got a lot of reasons why, guys.
Yeah, I think when I look at it, which is interesting, because I'd love to hear your perspective, Marty, because I've always considered myself, especially probably about 2 years after getting into wholesaling and investing in real estate, my attitude switched to, you know what, I'm an opportunity seeker, right? I'm seeking opportunities for my money to grow, and either to create money, right, by business, by investing some and creating money through business and offering value, but then figuring out, okay, one of the games of money is how quickly can I double my money, right? And when I look at that, okay, from the stock market to Bitcoin to real estate, what is the difference when I invest, and how quickly can I double it through either the rule of 72 or some other things, right? How fast will my money double? But also, am I taking a portion of my money and hedging against something? Am I taking a portion of my money and I want quick growth? And what is that expectation, right? So the way I look at that, and the way I thought is, okay, a portion I want to hedge, a portion I want a small but stable growth. I want big growth, somewhere between 7 and 10%. I want 10 to 15%. And then some of what I do, I want the 15 to 30% growth. And where should I put my money in order to do that? And I think that's where it really, if you can unpack that and create, I think someone said create a, instead of a savings plan, you create like an income plan, right? Like, how are you going to make your money? And then how are you going to multiply your money? And in what ways and how much risk tolerance do you have to play with? And I think when I think of real estate versus stock market, or real estate versus Bitcoin, It really has to do with what are my resources, what are my goals, and what am I trying to accomplish, and then figuring out what the best vehicle is to accomplish those goals. Mark, I know you got a lot of friends. I know you're in a lot of different areas. How do you determine, you know what, I'm going to put this in real estate, I'm going to put this in the stock market, I'm going to, like, what does each area represent to you?
Well, today, you know, the market being down and you're saying opportunities, today is going to be one of those opportunities. After we jump off a little bit this afternoon, I'm going to see where things are. With a market pullback, that's buying opportunity. Just like real estate, when you find a property that's undervalued, that's an opportunity. So I kind of look at both opportunities. I like real estate a lot more than the market. The reason why, you have to be always online. You got to pay attention. I did some options at one time, and you always need to be in front of the computer. And I like real estate because, you know, as you guys know, I love traveling. And I like to create the passive income. So I look for more opportunities creating passive income. Even when I look at real estate deals, you know, is it a wholesale deal versus a passive income deal? You know, we have one that's a land deal up in New England. And, you know, looking at it, you know, we're picking it up for, God, I don't know if they're following this podcast, but but we're picking it up for, you know, like roughly 37-ish.
Yep.
But then we can turn around and sell it as owner financing for about 75, but doing an amortization schedule like at 7.5% over like 5 years, it'll end up being $93,000. You know, so I look at more of the passive income and will generate roughly about $425 a month. However, we have a cash offer now, you know, for much lower than that. I think we got a cash offer for 55 now. The seller, we got him down to 25. So we may just take the cash and run on that particular one versus, you know, I like passive income, you know, plus, you know, the capital gains is going to be another topic and another issue here coming up, you know, especially with all the tax, you know, coming up. So when you look at that, if they're taking 40% of that, then your profit's really going to be 60. So you have to really, like you said, you have to weigh out all the aspects of it. You know, what's funny is during COVID, you know, my other half, you know, she always just put stuff in the mutual funds and just let it go. And she just literally spent 4 months just educating herself in the market. And, you know, I kind of taught her. What's that saying where the student becomes the teacher?
Yeah. Yeah. She surpasses. Yeah.
Well, that's a good point, Mark, about your significant other, is that it sounds like she took control over her own investments, right? And I think that's critical. I think that's super important, is that number one, you need to be educated on what you're doing. You know, you can't just haphazardly give somebody your money and then just go, hey, figure it out for me. That's not the right way of doing it. I don't think. I don't really believe that. For me personally, it was when I was making money and figuring out what to do with it. I was looking around at who the people that were financial advisors, like, who are you? You don't even have money, right? How can you tell me what to do with my money if you don't have any, right? So that was a big aha moment for me, because I wanted to, number one, you know, Marty Grisani is a business before I did any investing. I'm my own business. So I need to make sure whatever I'm doing with my own money is the right move. So if I'm going to be working with someone, they better be like way ahead.
So Marty, when you're thinking about, okay, this guy's got to be way ahead of me,
sure,
right? How do you determine, okay, what this guy proposes, whether he's an advisor, whether you're learning Bitcoin, whether you're going into real estate, what is your process for determining, you know what, I like this direction? Like, what do you look for in a place to put your money? Are you looking for massive growth for some? Are you looking to diversify and make sure some's safe, some's not? Are you all the way in? Like, what is that? Walk me through your process.
Well, my process is I like being in control, right? I like to be able to make the decisions too. And a lot of people that, if you're, you know, going to just put your money with somebody, it's already set up. They already have a plan. There's like an institutional plan that they have for you, you know, like your 401k. It might be like, hey, here's what it is. It's like a set it kind of and forget it kind of thing, right? And that's great for some people who don't want to take the time to you know, learn the business. But I wanted to, because I thought, hey, it's not that hard. And guess what? It's not. It just takes some time, right? But for me, I like having control. That's why I like real estate so much, because I have control over that asset. I can, drive by it. I can touch it. Here's another thing really quickly. If the CEO of Tesla smokes a doobie on Joe Rogan and it falls 10%, you're not going to necessarily have that with real estate, right? My building can't do that. So it's all very much a control thing for me, Ronnie.
Okay. So imagine I'm out in the audience, right? Let's say I'm listening to this. I'm like, you know what? God, I work 70 hours a week. I'm working my friggin' tail off. I have a basic idea. I've got my advisor over here. I don't necessarily want control, but I want my money to grow for me. And they might be thinking, man, it's awesome that you want to control. Man, I kind of want to control too, but I want to control my growth. Would you say that real estate would be the direction you would go? And if so, why? Or would you say, I want to put it into like a passive stock option? Or if you were to go those directions, obviously there's multiple choices in there. Like, what would your like direction, or maybe some questions you would ask? How would you allow them and help them process their issue?
Oh, that's a good question, because it's one of the reasons why I'm not like an advisor for somebody, because I'm okay with risk, right? And I'm okay with pain. A lot of people are not. A lot of people say they are, but they're not, right?
Right.
So I would say to that person, how willing are you to, change your mindset completely to go, I know you have all this money, but what if I could show you a way to use other people's money where you could just keep your money and do whatever you want with it, but you can use other people's money and leverage that and buy real estate. I don't know a way that's, at least me, I guess, again, I'm not the smartest person in the world, but I don't know a legal way of taking someone else's money and investing into the stock market, unless you have like a Series 7 license, right? So for me, I'm all about using other people's money, leveraging that money, and going into real estate. But that's not, again, that's for me, that's how you can explosively grow.
That's good. Mark, any thoughts on that?
Yeah, sorry, we're getting a little echo back, so I had to mute there. That is one. I'd like to go around afterwards and kind of let's talk the pros and cons. Marty did say something and nailed it on the head. That's one thing about real estate. I mean, where else can you go to a bank in this world in today's and get an interest rate you're like around 3 or 4%, leverage $200,000-$300,000 and put minimum into it, versus like, can you come up and put $300,000 into the market? Or like you can come up, in real estate, you can leverage $300,000 with only like 5% down, or even in some cases 0% down, which we all have. We've gotten zero, like Ronnie just said now. I mean, you're leveraging, I don't know what that dollar amount comes to, but imagine you have to come out of pocket and put all that money into the stock market. So that is one thing I like about real estate, because you can leverage and control so much more. I mean, each of us probably have millions of dollars worth of real estate that we're controlling. Now, how difficult is to control millions of dollars of stuff in the stock market?
That's a great point. Yeah, absolutely. Well, and I think when I think of the money, kind of what you're saying is, okay, each avenue of investing and each place to put your money, all of it, I think the number one rule, one of the guys I like to listen to, he says, the number one rule is that it's a game, right? Like money, growth, management, business, it's all a game, right? And you got to respect the game. And I think just understanding, hey, the stock market, there's two things that I keep in mind when I think of the stock market. One, you can't borrow 100 grand from a bank to go into the stock market to do, right? Like I need my own money to put it in. And so as I'm saving, I can put it in, and that's part of the game, right? And there's other ways to do growth with outside of the stock, things like insurance contracts, and realizing that a huge portion of wealthy individuals go into these insurance contracts and fully fund them and see the growth, right? And that there's additional tax benefits. But I think if you understand the game, like what you're saying, you can play. I think I've heard it this way: is if you use bank money or other people's money when buying real estate, it's like playing with fire, right? And when you have fire, you can cook a really nice steak, right? But you can also, if you don't know what you're doing, you could burn your house down, right? And so, but if you understand how to control that fire, right? How to control that system, you can take and say, okay, I'm going to learn this game, and I can take what I don't have, and I can then push that to growth in some way in astronomical rates. Now, let's say I have money, then it becomes okay. And this is where I like, and when I talk to my private lenders, and one of the reasons why my private lenders come to me is one of the questions is why would I lend my money to you versus throwing it in the stock market, right? Like, this is a huge question I get. And one of the biggest points that if you watch like a rate of growth is we talk about, and we go through the charts, the difference between an average return and a consistent return, right? Because you might have an average growth of, let's say 7%, right? But that average growth principal is going up and down, right? And that's really key, where in real estate, your principal stays the same and your return is consistent. And that consistent amount of money provides this opportunity to keep your money a little bit safer. I'm not going to say totally safe, but a little bit safer. But it also it creates predictability. And then from a lending standpoint, if I'm using my own money, the ease of access, right? The ability to, hey, I'm going to put this in, I can come in, I can make 10%, and then I can pull my money out, and then I can have the option of, I can move fairly quickly without these massive gains that you have to worry about from a tax perspective. So that's kind of one of the questions we talk about when we go into it.
Ronnie, that's a great thing for people listening right now when they're talking to someone who could potentially be lending them money on a deal, is giving somebody that, moment of clarity. It's like, hey, yeah, you could make potentially 5-6%, but that's an average. What about it's consistent? And oh, by the way, real estate takes a lot longer for things like in a downturn. I mean, you might have a Bloody Monday where it falls 200, 300 points, but real estate, it goes more by like quarters than it does by day. So you have there's more time with that. And again, I believe this, guys, I believe that it's a lot simpler to analyze a real estate deal than it is to analyze a stock, right? So, that's just, again, if someone has any sort of idea of how to do that, I believe they're going to be much more likely to put it into a real estate deal because they know the numbers, they see that it makes sense compared to some, new tech stock that just could either rise really quick or fall just as fast.
I have a buddy of mine that would kind of debate that about analyze. I mean, he's a whiz kid at analyzing stocks and does research, and he does analysts and stuff, and he writes up reports for one of the big boys out there. I'm not going to say which one, but he is super, like, they go in detailed, and it's almost the same. It really is the same thing as a financial advisor versus, I kind of look at us three as real estate advisors. I mean, how many times have each of you guys sit there and had people come to you and have questions, and you kind of gave them some advice and kind of helped them out through the process? So we just know the real estate game inside and out really well, and we're always constantly learning. That's why I love real estate. It's like so many moving parts, and to the outside, they're like, oh my God, real estate's got so much going on versus the market. I can watch it and see it grow. So, but you're back to what you're saying there, Marty. It is like, for us, we've been in it, we can analyze it, we know what to look for through ups and downs and just learning experience through the years. That's kind of what I kind of see out of it. Ronnie, like, what do you see as like, go through what you see as a pros and cons of like, stocks, why you like stocks versus, real estate. What are your thoughts on the pros and cons? And then afterwards, Marty will ask you the same question.
Yeah. So I would say a pro for the stock market, when you think of going into the market and investing, is it's a little bit easier when you can go to, say, like a JP Morgan, or you can go to these people who are analyzing the market and are putting billions of dollars into really understanding and management and coming up with a solid plan, right? Hedging. And so one of the massive pros that I see is I can leverage other people's expertise when I go in. So like, for instance, if you're at JP Morgan, I used to work for JP Morgan. So if you're there, they've got asset managers, they've got people behind researching the companies they're investing in. They have people behind figuring out, okay, what are some of the portfolios? What direction should we go? I think the other huge pro is if you believe in a company, right? Like if you're going to gradually learn, like, you know, I want to take an ownership mentality. If you believe in, say, Apple, right? If you believe in this company, there's an aspect of like, you know what? I want a small portion of that company and to see a small growth or failure because I believe. I had a buddy of mine who was like, hey, anything that you would buy their product and you like believe in their product, why wouldn't you put a little bit of money in that company? Because you're showing you believe in them, right? And so there's an aspect of like these companies are part of and viewing the future and trying to develop the future, right? And so I think there's an aspect of the smartest minds are on the cutting edge, and you can have a piece of either that growth or that failure, but you're kind of taking into your own hands. I want ownership in the building of our economy and our world. And I think that's a huge plus. I think that's just a way of looking at the economy and being bought into, you know what, should I vote? Should I be involved in politics? Should I understand what's happening? Should I get involved in my local government? Should I, right? Like just buying in a little bit from a stock market perspective, I think the trailing effect is that you become more bought in as a citizen and understanding your responsibility in the world today, which I think more people need to do that, right? I think more people need to care. So I would say that's number one. I think another pro for the stock market outside of just being bought in is I don't know how to say that. It's a really easy way to put your money somewhere that's not just cash, right? It's a really easy way of saying, you know what, how can I make sure that instead of my stuff sitting in a savings account, I can essentially save my money through an opportunity for it to grow, right? A 4 to 7%. And you don't really have to think much about it. I would say that's another huge plus.
Well, I would say, Ronnie, real quick on that point, I would say that I think we can all three of us agree, and any of our audiences should agree to this, that, you know, if you're just keeping money in the bank, you're losing money in your bank, right? So if you're not doing something to invest, then you are absolutely through inflation, okay, and we can discuss how that's in its own, you know, thievery, stealing your money. But yeah, if you just have money in the bank, you're missing out. It needs to be invested. So whether it's stocks or real estate, whatever, you know, I'm going to talk about how real estate I believe is the best, but it needs to be invested no matter what.
That's good. And so I think those are some pros with the market. And there's a lot more of people who are a lot smarter than I am that could probably bolster that up and say, yo, there's all these other pros, right?
What do you see as a con? What do you see as a con then?
I think the con is that my hard-earned money, the principal balance of that is at risk. I also see the big con, this idea of average return, I think is awful. I think no matter what, you should look for options that have a 0% floor. Right. And there are options, the power of zero, right? Where if the stock market loses 20%, if you hit zero, like you don't lose 20, right? You do 27% better than the market did. And so there are options out there that you can have a 0% floor. But the fact that your principal is at risk, I personally don't like. I know in 2008, I was in school, and I remember one of the guys I looked up to being like, dude, I just lost like 3/4 of my money. And I remember thinking like, how is that even possible? Right back then. But that stuff is real, where oh, hey, I might have an average return of 7% over 20 years, but what if one of those years I lost like literally most of my portfolio? I think the other negative is because it's so emotional. If you miss, I can't remember what it's like, the 12 best days in a market in a year, like if you miss those, um, like you're messed up, right? Like you're really messed up. And so I would say that's a huge con to the market, is if you're not emotionally strong with your money, it can be kind of hard. And then you got to ask yourself, what game are you playing? Are you just trying to get a little bit, or are you trying, like, your money is about doubling it, right? It's about how can I become financially free? How can I grow this quickly? And if you're at 7%, like, it's going to take you forever to make any kind of money. And so I don't like that, right? I don't like that at all, really.
Good stuff. Good stuff. How about you, Marty? Let's go through your pros and cons of the market.
Well, yeah, I think it's, again, I'm in control. I'm in control over it. And, listen, this might be whatever it sounds like, but I believe I'm the best at making decisions for my money, right? And that's it. I want to be in control of making the decision. I'll give one pro to stocks, and that's that it's way more liquid, right? So I can go and sell my stock right away and get my money. In real estate, it might take a little longer to do so, right? So that was
going to be my pro. You took it from me. Like, if you can get cash immediately, that was my pros. Like, you can get your money out really quickly if you need it. Nice one.
But I mean, at the end of the day, it's for me, I'm in control. For a lot of people, it's a sense of pride. Hey, here's my rental portfolio. Here's, guys, at the end of the day, if you got a rental portfolio, you're doing something that a lot of people are not doing. That's giving housing to people, right? That's a noble thing. And that's a sense of pride for a lot of people. So, hey, Mr. Investor, not only are you going to make money, but you're also providing housing. You're helping in this part of providing housing, which is an absolute necessity for humans, right? So what are your thoughts on that part of things? And these are just some ideas that I don't think a lot of people think about. I mean, it's tangible. I can go up and touch it. Right there behind me is the brick building that I own. I can go behind and touch it right now and be like, hey, that's my 5 unit. So little things like that.
Nice.
Beautiful thing.
So you did both. You did pros and cons in both stocks. Ronnie, how about you? What do you see the pros and cons of the real estate side of it?
Yeah, the real estate side, I think Marty hit on a lot of the pros, right? I think that the consistent return, I think the ability to, what I like to call, make big plays is much greater. And even from a lending perspective, a lot of people don't realize you can be creative with lending, right? There's a lot of guys, even in situations where, hey, I can lend on a first lien and I can make my money really safe, right, for a short term and make 10% for a short period of time. Or I can say, you know what, I'm gonna lend gap funding to an investor that I trust, and I can pull 25% out of a deal by being the money guy, so this dude doesn't have to pull out money, right? So I've done this, right? Is I have 50 grand and I lend to a few people to help for gap funding, and that 50 grand over a year makes me $14,000 to $18,000. Just by setting aside a little bit of money. That's not something you can do really in the stock market in any kind of consistent level, right? And so I can use my money to make large jumps, right? I can make 20%, 25% a year. That's in a fairly safe bet in short-term placements. And I love that. I think the other side, long-term, like let's say you get into a note and you lend on a note long-term, is I know exactly how much money I'm going to make, and I can build in, I want to gain X amount of interest and then get all my money back. And so if something goes wrong, I can either take that asset and turn around and sell it, or I can sell my note and get my money out of it too. And so I think that aspect of knowing exactly what I'm going to make You can make an educated guess and say, you know what, I'm going to make 8% amortized on this, which means I have this much principal secure and I'm making this much interest, which is way higher than 8% on the front end for a while. And then I'm going to get out and I'm going to push that into something else. So I think those are big cons. I think the negative of real estate is that it is an art. I actually think this is both a pro and a con. It's a art of getting into a deal, right? If you make a mistake, you could overpay for something, right? Where on the stock market, it is what it is, and you're hoping the future will go up and down. In real estate, it's really an art. You're kind of guessing what you think the value is, right? There's a way of figuring it out, but hey, I think I'm getting this at a discount. Well, you could miss a few solid criteria and you could be upside down in the property and you could lose money, right? Or have to hold it. But the flip side is true. You could make a mistake in a property and that mistake could make you an extra $100,000, right? Like both sides are real. And so I think one, a consistent return. I think two, you know exactly how much you're going to make. I think three, you have the opportunity to buy things at a massive discount. And four, you're dealing with people. And I really like that. I really like that I get to call Mark. I can say, yo, Mark, here's what I want to do. And me and you can come up with an agreement, and that's what we do. And we're in it together rather than me buying into something I don't know who's on the back end, whether it's Bitcoin or the stock market or anything. I like being able to call the seller and be like, yo, 1, 2, 3, 4, 5. Are you on the same page? Yes, no. Okay, let's work it out and go forward. I really like that. It makes me feel more in control. It makes me feel like how America, in my opinion, how America should have been back in the beginning, right? Where I can call somebody, come up with a deal, and we can work together on it. I love that. So
I want to kind of take this in a different direction a little bit here, because you know, there's a lot of people out there that I know that want to get in real estate. And I've had investors, private money people come to me, and a lot of people may not know this, but a lot of times they'll say, you know, I want to get in real estate. I want to invest in real estate, but all my money is tied up in my IRA or my stocks. Like, how can I diversify? And that's where most of my investors, when I talk to, they're in many investments and they just want to diversify. You know, they want to create that passive income and they want to diversify. So a lot of people may not know this, but let's talk about this a little bit about IRAs. You know, as you guys all know this, you guys can, people that have IRAs can turn around and use that and be a lender. Marty, you want to touch base on that? I'm assuming you've used investors that use their IRAs and they've gone through one of like the custodians like Quest or something like that.
Yeah, absolutely. I mean, I've done it myself, right? So, you know, for people who have a 401k or have an IRA, in my circumstance, I left my job. So I had a 401k sitting at the company where I was able to take that put it in a self-directed IRA and then invest in real estate. So I don't think a lot of people talk about that. I think that's a huge advantage for people who do have an IRA or who have a 401k. Maybe it's some money sitting at an old job and you just don't really know what to do with it, but you want to get into real estate. It's an awesome way to put some money into a deal, buy your own property. Now, there are some contingencies with when you buy your own property, you can't do certain things. I don't think you can like work on the house or anything like that. But for people who do use an IRA, I mean, it's a beautiful thing to get into real estate and then have it as like a way of lending money. I think that's one of the best ways of using an IRA, Mark.
Yep, absolutely. Ronnie, you got something to say on that one too?
Yeah, I think two things just real quick is one, if you want to go into real estate, just look up self-directed, right? How do you do self-directed? That's what Marty's talking about. So figure out how to do self-directed. And then once you figure out how to do self-directed, you can use that to put in areas. I think the other second thing is, a lot of people don't think about this, but when you retire, ask yourself, there's a book by David McKnight called The Power of Zero. It's a very small book, but he talks about how can I set myself up to be in the 0% tax bracket when I retire, okay? And utilizing your IRAs and your investments a lot of people are not set up to be in a 0% bracket, even with millions of dollars by the time they retire. And there is a way to structure it. And so you can do that via self-directed. You can do that going into real estate. You can do that with insurance contracts. So I would say the structure, a lot of people think, hey, I have money that's invested. Where should I invest in the stock market? What you should look at is, just like if you're redoing the back of your house and you're going to do landscaping, what is my structure? Like, what is my vehicle? How should it be in a Roth? Should it be in a self-directed? Should it be in an insurance contract? Where should my money be sitting? And then how can I take that money and put it in the object that I believe will cause growth in the way that I want it to grow? So look at self-directed, and then look at the structure your money is sitting in. And is that the best vehicle long-term and short-term for you?
I'll give an example of somebody that I know used his IRA. I had a property that needed, I'd say about $45,000 worth of work. So, you know, he took 50,000, sent it over. He became a lien on the property. And, you know, I told him I did it for, 6 months to a year, but I had it back to him in 2 months. And out of that 50,000, he actually ended up getting an additional 10. So he made 60,000 in 2 months on that. I'm sorry. He made $10,000 in 2 months on that particular one. So it worked out well on that particular one. Now, let's talk about something else in real estate that, some people may not be aware of, is syndication. You know, you can use IRAs and syndication. Marty, you're very familiar with this as well. Why don't you kind of give everybody a little bit of overview of what a syndication is?
Yeah, syndication is really just a collection of people who pool their money together in order to buy whatever it is that they're looking to buy. In our case, right, we're talking real estate. So to buy something that maybe you wouldn't be able to do by yourself. So taking down larger deals is normally when people syndicate. Multifamily, large commercial multifamily, in my case, is what I did with my 401k. So when I was talking about when I left my job, I took that money and I used Equity Trust, which is a great custodian. And I was able to partner on something that, again, I wasn't going to be a part of unless, it's a big deal. This was a multi-million-dollar deal, 50, 60 units apartment building that by myself, I wasn't going to be able to do. And oh, by the way, I didn't want to have to use my liquid money to do it. I was just going to use the money that was already there in my IRA or my 401k. So it was a great way of getting into something a lot larger, learning that I want to continue to pursue.
Nice. Yeah. And Ronnie, have you done anything in the syndication world? I know you're more single family.
Yeah, no, I'm not the guy to talk to about syndication. There's lots of other guys to do that.
I'm doing a syndication. Yeah, I'm doing a syndication right now in this land development. We have 5 investors kind of pulling the money together, including myself. And on that particular one, everybody's going to be putting in roughly between $75,000 to $150,000, and we're all going to syndicate on that particular deal. So, so that's kind of a syndication. I'm sorry,
Mark. I don't want to put you on the spot, but what does that look like in regards to, SEC and all those things?
Exactly. Yep. that is very good that you said that. And I think we should touch base on that really quickly, because a lot of you new investors are watching this, and I'm sure all of you guys have seen this. Like, they're posting, hey, I'm looking for a money guy, and I'm this, and this, and they're posting, the returns on the money. You have that 3-touch rule. And Marty, why don't you talk about that? And because you are correct about, you have to be careful of the 506C?
Yeah, I mean, I'm not the one.
It's a 506.
I don't structure the deals. I just put my money into the deal, right? But I know there's a huge thing to think about and make sure that you're doing it the right way in regards to, are you an accredited investor or are you not in putting the money into a deal?
Right. Or you cannot solicitate an investor if you don't know them, if they're not credited. But like this, I'm friends and family, stuff like that. You're perfectly fine. But, do a little research. You guys out there posting in these groups, looking for investors and money and putting returns and stuff on that. That's a big, big no-no out there. So, but that's a good point that you pointed that out. There's a couple groups out there that you can kind of get into, or like multifamily groups that you can kind of, there's some good SEC's attorneys that are really good on that. So I highly recommend that. So what else you guys think about, the pros and cons of real estate? Why do you guys love real estate so much, Marty?
Number one, I like deals. I like making deals. I think Ronnie said it best. He likes talking to people on the phone. He likes figuring out, I'm sure I could speak for Ronnie when I say he likes to be a problem solver, right? And that's one of the things when you're putting together a deal, you're going to solve some problems. You're going to be able to make somebody's problem go away, or you're going to be able to help somebody. I mean, those are beautiful things that I don't think people talk about in regards to real estate. It's always numbers and money, but really at the heart of that is what were you able to do in order to do that? Solving a problem, fixing a problem, and bringing people together that can do that. Right. So if you're a deal maker, I can, my spiel would be, hey, I'm a deal maker. And what I do is I take high net worth individuals and I take problem properties and I marry them so that both are, solving a problem together and fixing a problem and both benefit. Right. So it's all about making sure, for me, is finding the deal, solving a problem, putting it together, and creating a win-win-win.
How about you, Ronnie?
It reminds me, back in 2013, when I first got started, I was working at Chase, and I'm making a job. I'm doing sales, and I had some money in the bank, and I'm just thinking, man, how this guy made a $2 million deposit right at the bank, and I'm thinking, yo, what does this dude do? Right? Like, he just made a freaking $2 million deposit. And so I called him, and we actually had a good relationship, and he took me out to lunch. And through that conversation, I realized that there are people out there, I'm now one of them, that have the opportunity to take money and make massive amounts of growth in their cash. Okay. And so what do I like, why do I love it? It's one of the easiest, I shouldn't say easy, but it's one of the easiest low barrier ways for anybody to take any amount of money and make 10, 25, 40 grand, 100 grand in a 3-month period. Literally anybody watching this could take a little bit of time and read a few books and watch a few things on YouTube, and you can take any amount of money that you have. Let's say you have 250 grand in the bank, right? On an IRA that's there. You could say, you know what? I'm going to leave 150 grand. I'm going to take 100, and you could double that money in 6 months with just a little bit of strategy. And so I share that to say it is the only vehicle I know that can consistently be replicated in a way that can allow you to make massive jumps in your personal wealth than anything else. I think anything else, one of the things I was just thinking about this yesterday, it's like I have these long-term goals, and I'm like, man, it's going to take me 3 years to get set up to be able to hit my 10-year, right? Man, it's going to take 10 years to potentially get to here. And I'm not going to share that stuff, but thinking about it long term, I think can cripple a lot of people where they're like, man, okay, my money's going to grow from 100 grand to $180,000 in, X amount of years. There is a certain amount of energy and excitement and adventure to, I'm going to go make $35,000, right? There's an energy to that. And so if I had to say the reason why I love that, it doesn't matter if you have no money. It doesn't matter if you have 250 grand. It doesn't matter if you have a million in the bank or 2 million. The ability through real estate to take that and multiply that, I think, is the easiest to learn, to get into out of any other option out there. I think there's some others that are a little bit higher risk that I also like, things like cards, things like valuables like paintings. But I think real estate has a hedge and a growth that nothing else does. And so that's why I personally like it. I think it's the easiest to understand, and you can do big plays in your life where you could be an average Joe making 70 grand a year or 250 grand a year. And you could say, you know what, I'm going to do 3 deals this year. I'm going to put an extra 5 hours a week, and you can double your income.
You know, I love that, Ronnie, because, you know, one of the things that you said earlier was opportunity. Like, you seek opportunity. Here's something that I believe is true in my brain. And that is, you can be someone who isn't that sophisticated to get insider information on something that can make you 10x, 20x, 100x your money, right? So in the stock market, you got to be one of these guys in these dark rooms and in Manhattan buildings to get some inside information on something where you could double your money, right? Well, in real estate, you can know somebody who goes, hey, I need to sell, not really sure what to do. And there's thousands of these. There's so much more inside information in real estate than there is for the average Joe than there is in the stock market. I don't think people talk about that. I think there's a ton of insider information you can find constantly through government websites, seeing, you know, this is a stock, you know, this was a tax hasn't been paid, mortgage hasn't been paid, all these little things that if you take the time and you dig in and you want it, right, then you can absolutely double, triple, quadruple, whatever your money that you want to in real estate.
And Mark, I want to hear what you have to say on top of that. And I think the other thing with the insider information, Mark, I know you're a huge component of this. You could do one deal and make $20,000 and then join a $20,000 group, right? Like, just if you're thinking of like income, think of how much long it takes to make 20 grand at a normal job or to grow your money. And so to take a principal amount and pay to jump into this, like, is a huge investment, right? I know people that have $1,500 to learn is really difficult. But if you do a deal, you make 20,000, that's not your normal money. You take 15 of it, you join a group where everybody in that group paid $15,000. Well, now you're in a group with people who know a lot more than you, and you can get real insider information that I think it's just going to propel you even further. And you're going to realize, dude, the opportunity, I didn't even know.
Yep.
Mark, what do you think about that?
Yeah. I mean, today I'm going to be jumping on a flight, you know, after this, and I'm going to be, you know, rubbing shoulders with all the gurus, if you will, the Pace Morby, the Joe, Vanilla Ice is going to be there. So, you know, just being in that room, I think even Sean Terry might even be there. So just being in that room with all this knowledge of real estate investors is just going to be, and a lot of these guys are coaches and teachers, and they have the courses and stuff. So yeah, I love groups, masterminds. I love rubbing shoulders of, you know, I know Marty's always said this. I don't want to be the smartest person in that room. I want to be on the bottom and just kind of you know, I have a thirst for knowledge, if you will. You know, that's kind of how I go on, and I'm always looking and hearing different strategies. But the reason why I kind of got back into this, you know, I got in real estate banking back in '95. I've had many different businesses, but what really lit me up again, and you guys have all done this when you guys read Rich Dad, Poor Dad, you know, and it's a true story. And and if anybody is just getting into real estate and you want to get into real estate, highly, 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 highly recommend that book. It just shows somebody that's gone to school, completely educated, and, you know, have a master's degree, and they're just, financial literacy is just not there. And then this one person just never finished school, I don't think, and he just educated himself on the finance world. And that's where you really need to, in the school system, when I was growing up, they didn't teach us that, you know, at all. So you have the resources today. Look up on YouTube, join groups, join masterminds, and just network with people. You know, that's kind of the big thing. So, but yeah, it was a good show today, gentlemen.
Yeah, it's awesome. It's good talking through stuff. Any final thoughts we want to leave with anybody? Any key nuggets at the end? Mark, you want to kick us off?
God, I'm speechless. I just kind of went through all my stuff right now. I thought you were going to jump to Marty here to give me a thought process.
Sorry, Marty. We'll start with you.
It's pretty simple, guys. Take control over this stuff. This is important stuff. I don't believe that financial literacy is something that you should depend on other people. You should absolutely take this and make sure that you understand it, how to grow your own net worth by yourself. And that will set you up. I think that's the most important topic that nobody talks about.
Yep, I agree. Yep, educate yourself and just educate yourself. And there's so much resources out there, and just take action. How about you, Ronnie?
Yeah, I'm in the same boat. I think when it comes to money, we live on an economic planet, right? The love of money is the root of all evil, but a lot of people, they only do things for money. It just might not be millions of dollars. They just might spend all their time for a little bit of money, and they're not asking and educating themselves. And I think that's a reason why a lot of us are miserable, is we feel stuck. And that feeling of stuckness, guys, we gotta, the people out, you might think, man, you have this, you have this. We all can look at our situation and say, you know what do I have to do? Like, if I got myself into this, I can get myself out. And that plan might take a year. That plan might take 6 months. That plan might take 2 years, but just a little bit at a time. If you can become, a little bit more knowledgeable, a little bit more confident, there's lots of options. There's lots of options for people who don't have very much, right? And I think that's why I love real estate, is even if you don't have very much and you put just a little bit aside, even with taking 6 months and putting 7 to 10 grand aside, you can take that, if you educate, and you can do a big play, and that 7 can turn into 22, and that 22 can turn into 40, and that 40 can turn into 80. And now that 80 is a year and a half worth of income, and now you have options, and it might took you 2.5 years of like grinding, right? But once you're there, you now have options, and you can decide, what do I really want to do? And that's why I love real estate, is it just offers that those opportunities. It offered it to me, right? It set me free. So that's all I got.
All right, gentlemen. Till next week.
All right. Yep. Have a good day, guys.
Take care.